Coming up, Allie might be on vacation, but he left us a meeting of the Velshi Band Book Club. Right after the break, we'll open up a new graphic novel called You Must Take Part in Revolution by journalists Melissa Chan and
Hi,
artist
folks.
Bobby Howe. The novel is
My name is
10
Eric
years in the
Lean,
future and is about the
and
freedom
I'm
and the
with
realities of musicians.
Coldwell Banker Village
Allie
Green
of
Realty.
Velshi
Oops,
Band
this
Book
side
Club
here.
is next.
I'm a real estate agent, and I train real estate agents as well. So I want to welcome you here to this home buyers boot camp. There's only a few of you here today. So feel free if you have any questions, just unmute yourself, ask the question, I'll stop. Because usually I have 20 or 30 people here, and it takes about half an hour or so, but we're probably going to be a little bit faster than that.
It's 10 o'clock.
But like I said, if you have any questions, please feel free to, stop me, ask, and I'll gladly answer any questions that you have. So, all right, here we are. Welcome to our exclusive home buyer webinar, the Home Buying Boot Camp. Again, I'm a real estate agent and for Coldwell Banker Village Green Realty. I've first been licensed since 1995. So I'm one of those old timers. I've been in this for quite a while and seen a lot of different things. I've been in markets that are up, markets that are down, up, down. Just seems to be everything is cyclical, just like everything in life. So the next 10, 15, 20 minutes, you're going to get some powerful insights to the home buying process so you can confidently purchase your dream home. So here's some of the things you'll take away. How to financially prepare for your home purchase. We're talking about things you should do, things you shouldn't do, purchases that you should wait on, those kinds of things. We're going to talk how to optimize your credit to get the best loan terms. The better your credit score is, the better your loan terms, percentage, interest rates you'll get, and that'll equate to a lower monthly payment. So we're going to go over a breakdown of the loan approval process. This is one of the most daunting processes in the home buying process. It can get a little bit stressful. So what I tell people is, when you're getting a little bit stressed on this, just take a deep breath, let it out. You might have to do that a few times, and that'll just reset your nervous system a little bit and help calm you down some. But your agent, if you do hire an agent to be your agent, they'll walk you through the whole process, and they'll be able to give you an idea of what's going on exactly during that process. We're also going to go over a smart home search strategies to find your ideal home. Nobody wants to miss out on the right home, and I see it happen all the time. We're also going to go over how to avoid costly mistakes during the closing process. So you want to make sure that your finances are in place. There's no big purchases, those types of things, and that will, it'll help make things go a lot smoother. And the banks like to see, that you're not spending a bunch of money as you're preparing to purchase your home. So number one, how to financially prepare for a home purchase. Before really starting your home search, your final financial preparations, that's really crucial. What you're going to need to do is you're going to need to set a realistic budget, something that is within your means of paying back. You're going to need to understand what you can afford by assessing your income compared to your debt and other expenses, your living expenses, those types of things, your lifestyle expenses, because we all have a different style of life. But one thing you need to do is be aware. Typically, banks only like to allow up to 30% of your pre-tax income to go towards your housing, and a total of up to 36% of your pre-tax income for all of your debts combined, housing, car loans, credit cards, those types of things. Although there are some lenders out there that may have programs that allow for a higher debt to income ratio. I've seen, I've heard, up to 40% of your pre-tax income for your total debts. Those are in situations typically for people who have, low debt, high income, high credit scores. So, what you're going to want to do too is you're going to want to save some money if you don't already have that saved. Saving for a down payment, depending on the loan that you choose. Typically, the down payment, there is a USDA loan that can go with 0% down, and then you pay, you pay your closing costs. But typically on the FHA and the VA loans and conventional loans, it's a 3% down to 20% down. Then you also have to figure in your closing costs. Closing costs are going to be anywhere between, say, 3 and 6% of the home price. Could be a little bit more depending on what taxes are and things like that. But you're going to need to have that type of money set aside. So if you're looking at, say, a $200,000 home, if you're going, for your closing costs, you're going to want to make sure that you've got about $12,000, $13,000, $14,000 stuck away. Of course, the more expensive the home, the more that you're going to have as far as your closing costs. If you don't already have a savings plan set up, you should set one up. What you should do is you should dedicate a certain dollar amount or a certain percentage that you stick away every week or bi-weekly, however you get paid. And then put this towards your down payment, towards your closing costs, because you're certainly going to need those monies. I find with me, when I stick a little bit away here, a little bit away there, I don't miss it as much as if all of a sudden, whoa, I've got to come up with, hundreds or even thousands of dollars. Yeah. So make sure that you do save money and put it in a bank. Don't stick it under your mattress. The banks are going to want to verify where money's coming from. There are laws these days to make sure that, it's not being laundered. But the banks have, they want to know where this money's come from. If all of a sudden you come up with, say 20 grand that you've had stuck underneath your mattress, that you've been saving for the last 10 years, they're gonna question it. It may not be that big an issue, but they're gonna question it. So anyway, also what you need to do, anticipate hidden costs. I've seen it happen several times where all of a sudden, nobody figured in what their homeownership fees are going to be, other than the mortgage, taxes, insurance. There's homeowners insurance. There's maintenance to the property once you own it. And if you're in a neighborhood, there may be homeowner association fees if you're in a neighborhood with a homeowners association or a gated community. So just be prepared and ask your realtor, ask your lender about any other fees that you may or may not be thinking of. That way you're not surprised. It's better to have money set aside for say maintenance, insurance, because the lender's going to want you to have money for, say, taxes and insurance held in escrow. Sometimes they require 6 months up front, sometimes they require a year up front, so you're going to want to know that. And sometimes you don't know that right away. So just be aware of those hidden costs. Next thing you need to do after you've considered all of these things is you need to go speak with the lender and you need to get pre-approved. Some people say a pre-qualification, some people say pre-approval. There are differences. A pre-qualification, basically what that is you've spoken with the lender and you've told them what you have. You've told them what you make. You've told them what your cash deposit, your cash down payment is. You've told them about investments you may have, but they haven't verified. The pre-approval is you've started sending them some of these documents. You started sending them, your bank statement showing your savings, your investment savings, showing what you have in investments, whether it's stocks, bonds, mutual funds, those types of things. So getting the pre-approval is a little bit more than a pre-qualification, but there is also getting pre-underwritten. And what that is, that means you provided them all of these documents and the underwriters have taken a look at everything and basically you are approved. The only thing you need to do is pick out your home. That's going to make a big difference when you're crafting your offer. When you do find your home that you are pre-underwritten, you're able to close much faster. Should that be something that the seller wants to do? A lot of times people want to move right away, and some people are like, I need 6 weeks to clean the house out, move everything, and put it in storage, those kinds of things. So, but the pre-approval is the best way to go, unless you can go to a bank, get the lender to do a pre-underwriting for you. Not all banks do this, but I think more and more are doing them on a daily basis. So, any questions at this point here? If you do, feel free to unmute yourself and ask questions. I don't have a problem.
I do have a question.
Sure.
Do you have any tips on how to kind of get an idea of how much your utilities might cost for whatever house you're getting, so you can kind of include that in your budget?
Well, typically what you'll do is you could call the, say if it's NYSEG or whatever the utility company is that's servicing the house, you could call and find out what the average yearly, what it's been monthly for the past year. They'll typically give you that type of information.
Okay, thank you.
All righty. Any other questions? Okay, we're going to continue. Second thing, we're going to talk about how to optimize your credit score to get the best loan terms. Everybody knows that the higher your credit score, the better the banks look on you and the lower your interest rate's going to be. So your credit score does play a major role in your mortgage interest rates. It could mean the difference of a couple of $100 a month in your monthly payment. So here's a couple of ideas on how to maximize your score. One of the first things you should do is check your credit report if you haven't already. You can request a free credit report. I believe it's from freecreditreport.com. They used to allow you one a year free credit report, but I think they've increased that now to either monthly or I want to say that I've heard, not confirming, that they'll do it for you fairly regularly, not every hour or so, but maybe every few days, every week or two. But I haven't been on there in a while personally to check that out. One of the biggest things you want to do is you want to hold off and avoid taking on any new debt. I've seen people go out and buy their new furniture, buy their new appliances, spend money just before they're going to close on the home. The lender checks to see if their credit rating is still the same, to see if their debt to asset ratio is the same. Now it's gone up by thousands of dollars and there's a problem. So, also, I used to sell cars retail. I've seen people who would come in and, oh, yep, I'm buying a new car. Yep, yeah, I'm closing on my house in 2 weeks. And whoa, stop. Don't purchase the car until after you purchase the home and you close on the home. So don't make any big purchases. Don't put anything on your credit cards. One of the big things is don't close any of your credit cards. And this is because when you close your credit cards, say here with those credit cards open, you had a $10,000 limit, and then you close one and it's a $3,000 limit on that card that you close. So now you've only got a $7,000 total limit, and your credit ratio is, your utilization, how much you're using of your total debt is going to be higher, because now it's comparing against $7,000 instead of a $10,000. So don't close any credit cards. Don't make any big purchases. Don't put any items on your credit cards. Of course, some of us have, things that automatically hit, but don't charge any new things, and try to keep your utilization rate down. Banks like to see it less than 30%. The better you can be under 10%, that's going to be the best for you. Any payments that you have, any payments that you have, car payments, credit card payments, utility bills, make sure that those are all on time. The banks are going to want to see that you've been making payments on time for 6 months to a year. They may look at your utility bills. They may not look at your utility bills, but they're certainly going to look at your credit card payments. They're going to look at your car payments. If you have, any other things. I know some people have some of those big sheds or something that they get from Home Depot, and they put it on that Home Depot account. If you've got any of those, make sure all those payments are made on time. If you could make extra, that's better. Because again, you want to lower that utilization rate. 30% the banks like to see, under 30%. But if you've got under 10%, they're going to look much more favorably on you. Again, keep those old accounts open, because another thing, along with lowering that, your total available credit, what'll happen is if you've had those credit cards open for a longer time, the length of credit history, that matters. So if you've got a credit card, I know I've had some credit cards that, I didn't use for 2 years. I didn't use for 3 years. And sometimes the banks will, if you don't use it, there's no balance, they'll just cut you right off. And that lowers your credit card or your total credit availability. It's going to lower your credit score. So you want to keep those old accounts open, maybe every 2 years or so, charge ice cream with the kids on it. And then pay it off right away. Maybe put gas in the car and then pay it off right away. And then you got another couple of years before they start looking at you as they're not using the card, let's just cut it off. So length of credit, total credit utilization of how much total credit you have, keep it under 30%. Under 10% is better. And don't put any new charges on your cards. So, all right. Questions? Great. We're gonna move forward with this. We're gonna go over the loan approval process. First thing I need to explain: the loan approval process can be frustrating. Understanding the mortgage process will help you to understand any potential surprises and delays that may come up. So here's a little bit of what to expect on that mortgage process. I tell everybody the first rule for applying for a mortgage is you need to understand the lender may ask you for the same exact documents over and over and over again up until the day of closing. So, this is what I suggest. As they say, I want your pay stubs for the last 6 months. Make copies of those, send them via text, email, that kind of thing, and keep them together. Keep everything that you're sending them together, because again, like I said, they're going to ask you for the same documents over and over and over again, and if you have to keep going back into your drawer or your filing cabinet or whatever, it's going to be frustrating for
It's
you.
12
You're going to
o'clock.
say, why do they need this? I've already sent it to them 5 times already. Like I said, it happens. So just keep them all together so they're easy to find should you need them in a rush. It's a mortgage. It can be stressful, but in the end, when you're sitting in your new home, it's going to be worth it once everything is over, and it's not going to matter anymore. That frustration is going to, go from you, and you're going to be in your new home. So, on the pre-approval, we talked about a little bit of that. The lender's going to review your income. They're going to review your credit score. They're going to review your debt to see how much you can afford, and they'll issue a pre-approval letter. They can do the same thing with the pre-qualification letter, and they can do the same thing with the pre-underwritten letter as well. Of course, they'll say different things, because one's a pre-qualification, one's a pre-approval, one's pre-underwritten, so they have a little bit of different weight when you're making your offer. Once we find the home and we have the home offer accepted, we've done some negotiations, then you're going to formally apply for the mortgage. They're going to give you an application. You're going to have all of that filled out. You're probably going to have that all filled out beforehand, but we'll send them the purchase offer, the accepted purchase offer, and they'll start doing things on their end to get your loan approved. There is that underwriting process. This is where the lender is going to evaluate all of those financials. They're going to evaluate the property. There's going to be an appraisal ordered by the lender to confirm the value of the home. So they're going to make sure that all of their ducks are in a row on you, on the property, to make sure that it's a secure loan, and that they're good with lending you the money, that you're a good security risk on lending you the money. You, again, keep all your documents. You may have to send them over and over and over again. Then what's going to happen is you'll get a conditional approval after the appraisal, possibly. If the appraisal comes in at the sale price or higher, everything is good. Sometimes, depending on the loan, an FHA loan or a VA loan, they may require some work to satisfy those lending requirements for that type of loan approval. The FHA, Federal Housing Authority, and the VA Veterans Administration, they are government-backed loans. They will secure the loan, but they have higher standards as far as the home's condition. Peeling paint. That's one of the things that the VA and the FHA really don't like seeing, because that's just lead. If you got peeling paint, it could lead to moisture or bugs, that kind of thing coming in. A broken window, broken door latches, those kinds of things. They make sure that it's safe. If there are handrails that are missing, they'll want those done. So they're really looking out for you as far as the home buyer to make sure that the home is up to a certain standard. Um, and they're also looking out for themselves because they're lending you the money for this investment, and they want to make sure that it's a good, solid loan. You'll wind up getting your final approval and your final closing disclosures after everything is all done. If you do have to have any requirements for an FHA loan, a VA loan, or even a conventional loan that the bank does require to be repaired before closing, you'll have to have those done. Sometimes most times they'll send the appraiser back out there to check, make sure everything's been done, and they'll sign off on it and give you that final approval and your closing disclosure. What you want to do is, with the attorney, you're going to review those documents and with a lender, because on that final closing disclosure, there may be some of those hidden surprise fees. I just went through a deal that there was a fee that wasn't put on the disclosure, and it wound up being, okay, it was a surprise. We didn't realize it. We got through that. But again, like I told you before, earlier, you want to make sure that in case some surprises come up, that you may have some extra cash. And by extra cash, I'm not talking extra $20, $40. I'm talking maybe an extra few hundred to a few thousand, just in case. Once the closing day is here, we're going to all gather together, sign a bunch of documents. The bank's going to fund the loan, and you're going to receive the keys to your new home. That's the most exciting day for me. I love it when I help somebody realize their dream of home ownership. So, all right, we're going to talk about some smart home searching strategies. Finding the right home efficiently requires a strategic approach. You need to, and I would say, sit down with a piece of paper, define your must-haves, one column, assign your I'd like to haves in another column, and then decide, what are your top 3, maybe up to 5 items that you must have in a home to write a competitive offer. Just so you realize, there's no perfect home. Most people are going to get maybe 70, 80% of what they're looking for. If you get anything more than that, you need to snatch it up right away. Because finding a perfect home that's got everything you want, it rarely ever happens. But if you pick out those things, then you'll be able to prioritize them, figure out what really is your 3 or 5 items. Is it the number of bedrooms? Is it the location? Is it the monthly payment? Those types of things. Maybe you're going to purchase on your own. Maybe you're going to work with a real estate agent. Either way, doesn't matter. With an agent, you're going to have representation. You're going to probably have a much smoother process, unless you've purchased homes before. But they'll be able to walk you through the process and negotiate on your behalf and make sure things do go as smooth as possible. You want to set up alerts and be ready to act fast on homes that are in your market, whether you're getting set up with MLS notifications, or you're on Zillow, Realtor.com, Homes.com, and have things, picked out, what you're looking for set up there. You need to be ready to act fast, especially in this market, because some homes sit on the market, some homes are sold within a day. So when you're visiting the homes, you want to look at it with a critical eye. You want to look beyond the aesthetics and assess the home structure, assess the location. Is it on the corner of a highway? Does it look like there's some abandoned homes on the same road? you know, you got to look beyond everything. You got to look beyond what you're seeing because fluff goes a long way. When you're ready to make the offer, you make a competitive offer. Do a little bit of research, and this is where an agent comes in handy. Do some research, find out what homes like that have been selling for. That way you don't overpay, and that way you don't offer too low and potentially insult any sellers. So again, don't make it. We're going to go over just a few more things here. Don't make any major financial changes. Like I said, avoid the new debt. Don't make a job change. Don't make any large purchases. When we find the home, we do a thorough home inspection by a licensed home inspector. They'll go over the home, look out for your best interest, let you know what the home is about, and that way we can address any major issues before proceeding. Like I said, always review those closing disclosures carefully and make sure you have the necessary funds to close, plus a little extra. Never know when the surprise is going to come up. And either the day of or a few days before the closing, we're going to do a final walkthrough to verify that the property's condition is in the same condition when you purchase them. So be prepared for closing day. Bring proper identification, driver's license, social security card. Review all the documents with your attorney, and once you've got those keys, celebrate your home purchase. So these are some next actionable steps, what you can do. Speak with a lender. Even if you're not sure if you can do it, speak with a lender, tell them your situation, see what they think about purchasing your home. They're going to ask you all kinds of questions, and that's going to be your first best step. Connect with a trusted real estate agent, who understands your goals and shares those goals with you. Stay proactive and informed to make the best decisions, for you and your future. And I hope this has been really informative for you today. And before we go, what questions do you have? Anything?
I don't. Thank you.
Trista, I appreciate you. If you guys do, both of you, Melanie, Trista, if you have any questions, feel free to reach out to me. My cell phone number is 607-483-1236. Alrighty?
All right.
Alrighty, well, good luck on your home search. I wish you well and everything. Where are you from? Where are you looking at?
I myself in Otsego County area. I'm not.
Okay. I'm in Delaware County. I'm over in Bovina.
Yeah, not too particular, but Otsego.
Yeah, where are you at, Melanie?
I'm up in Middleburg, New York, outside of Cobleskill.
Oh, okay. So you guys are closer to me than I work out of an office in the Hudson Valley, but I work this area here.
Okay.
So, well, if you, like I said, if you have any questions, feel free to reach out. Feel free to call, and I wish you the best of luck. Alrighty.
Oh, thank you so much.
Thank you. Have an amazing day.
You too.
All right. Bye-bye.
Bye.
Disclose the names of CIA analysts. In a larger manner, they have disclosed hundreds of social security numbers of people in documents with